Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, dubious speculation. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Link is in the description below. Let's go ahead and jump in. So Bitcoin is now at 57K. So I do want to talk a little bit about the move we are currently in. We talked about this pattern a lot, and we'll speculate on exactly where we are. What are some things to look for over the coming weeks? What the likely process is that I think is playing out. But one of the things that we have noted several times is this general tendency by Bitcoin sort of move up, consolidate, and then move up again, and then eventually move back down, right? And we've seen it over and over and over again throughout this entire phase. You move up, consolidate, right? Move up, consolidate for a bit, go up even higher, and then go back down again right here, right? We've seen it happen many, many times. And even recently, right? Even like, latter part of 2023, we did the same thing, up, consolidate, up, back down. And so now, over the last couple of weeks, we talked about, hey, this is a likely scenario again where we move up, consolidate a little bit, and then we push higher. And now the question is as well, exactly how much higher will we push until there's another drawdown? And again, I mean, no one truthfully knows the answer to that question. Of course, everyone's going to try to give their best guess. You of course have the people that'll just say up only. And I mean, I'm not trying to say that. I mean, look, Bitcoin has mostly gone up for a while, but there will be pullbacks along the way, and it's important to recognize that. And just in the same way that we talked about this correction coming in, 21% correction, we'll probably have another one. And so one thing to keep in mind with regards to all of these corrections is that they've all been about 20%, right? They've all been about 20%, between 20 to 22% or so. Now, what's interesting is if you go into the distribution phase that we had back over here, we actually had a lot of similar corrections, right? Like this one here was about 30%, right? This one here, about 26%. This one here, about 27%, right? They were all about 20 to 30% corrections. And then we finally had this correction, another 20% drop, still within the realm of historical norms for that bull market. And then we collapsed below the 20-week and then got another 36% correction. So, right, what I've said for a long time is by the time you get a larger correction, it could signify a change in the trend, just like it did in 2019. And I'll talk a little bit more about 2019 in this video and why I keep comparing the current cycle to it. But by the time you had a larger drop, 35%, it signaled a reversal in the trend. Before that, you were basically just getting 15, 20% corrections, nothing more, nothing less. And so that is sort of the phase of the cycle that I think we're in. And one of the things that we can do is we can look at a lot of things, right? We can look at the short-term bubble risk, which is the extension from the 20-week moving average, and note that we're currently about 35% above the 20-week SMA. Right? Noting that prior highs, extensions from the 20-week SMA in recent times extended to about 40% above the 20-week moving average before they lost a little bit of steam. Even though in those cases they still did move a little bit higher after hitting that 40% extension. What would a 40% extension be? Right? Well, it would correspond to around 59K. Now, what's interesting is from 59 to 60K or so, a 20% drop from that level would essentially put you at around 48, 49K. Depends on exactly how high it goes, whether it's 59K, whether it's 60K, puts you right around 49K. And the reason why that's interesting is because the last drawdown took us down to around 38 to 39K. So I was thinking, if we do extend a bit higher and we get that 20% drop, perhaps that is the area to look at, that 48 to 49K. Furthermore, another thing to look at, and actually at a very similar time frame, was we came up into this range over here in February of 2021, right? We had this correction right here in January, kind of the same thing, right? And then we pushed up into February. We got this correction right there that occurred in late February, and it ultimately came from a level of around 58K and then bottomed out at around 45, 46K or so. Now, I'm not saying that it has to play out in the same way, but there is something next week that we need to be aware of, and that is an unemployment report. We've seen a lot of that excess get removed in terms of job openings and hires and quits. So it's only a matter of time before it makes its way over to the unemployment rate and affects the larger labor market. So if you do get a scary print, it could lead to some type of sharp move down. But the thing that is important to remember is that in both 2021 and in 2019, it was sort of like a longer distribution, right? Like it wasn't just a single move. It was a longer distribution. And one of the questions I keep getting is, why do I keep comparing this move here to the one in 2019 as opposed to the one right here? And the main reason is because it all goes back to monetary policy. And I get that a lot of people here don't really care about it, but there's two very distinct types of bull markets, right? There's ones that take place during QE. There's ones that take place during QT. There's, that take place during high interest rates, take place during low interest rates. And if you look at the Federal Reserve's balance sheet, you can see that in 2019, we had high interest rates and QT. In 2021, we had low interest rates and QE. So the reason I keep going back to this 2019 comparison over the 2021 comparison is because today we are in a high interest rate QT environment, which is more similar to 2019 than it is to 2021. And if you need further proof of it, when we made this move, when Bitcoin made this move in January up to 58K, 57, 58K, which is the very move we just saw, what did you notice about the Bitcoin dominance, right? What did you notice about the Bitcoin dominance during that move? Did it go up or did it go down? Well, pretty clearly, you can see that the Bitcoin dominance during this move up has been going up. But during this move over here, when Bitcoin made this move, Bitcoin dominance was going down, right? So it's just another piece of evidence to suggest that while it's easy to compare it to 2021 in terms of prices, I think it's more relevant to compare it to 2019 in terms of monetary policy and how the Bitcoin dominance plays a role in better understanding that. Another thing to think about is looking at all the Bitcoin pairs and see how a lot of them are bleeding, whereas back over here, a lot of them are going parabolic. Remember back over here, anytime Bitcoin cooled off for a week or two, altcoins would take over and Bitcoin dominance would drop, and we saw Bitcoin dominance drop from 60% to 40%. Now we're seeing the opposite. We're seeing Bitcoin go up and we're seeing dominance go up with it, which is exactly what happened in 2019, right? That's what happened in 2019. And if you overlay, again, let me just overlay the dominance over here. As Bitcoin went into this distribution phase right there, the dominance went absolutely parabolic. So there's a lot of people you will see on Twitter or X or YouTube where they keep talking about this nebulous altcoin rotation, their alt season, right? They keep talking about how the dominance is going to top out. And there's going to be this massive rotation into altcoins. But again, the difference between 2021 and 2019 is that the phase of the business cycle we were in lower interest rates and QE in 2021, higher interest rates in QT in 2019. And so the purpose of Bitcoin rallies during QT and high interest rates is to break altcoins off of their Bitcoin support levels, right? That's the whole idea. When you look at total 3 minus USDT divided by Bitcoin, what do you notice? It's down here and it's trying to break this range low. That's the same thing it was doing over here in 2019, right? It had these range lows and it was down in these levels as well. And it was ultimately that final Bitcoin rally in June of 2019, just before rate cuts arrived, that led to these alt Bitcoin pairs finally breaking down. Bitcoin dominance went parabolic, and it continued to chop altcoins up for several months. So I think the telltale sign is that if Bitcoin does continue this move into higher prices, 58K, 59K, wherever, if it continues that move, does the dominance go up with it, which I think it likely will. And then furthermore, if there are pullbacks along the way, like we got over here, does the dominance continue to shake the altcoin market out, right? During this period over here, Bitcoin dominance continued to go up throughout that entire phase. But during this distribution phase right here, Bitcoin dominance was going down during that phase. So that will be the telltale sign. If Bitcoin USD reaches some type of local high where it's unable to continue to break through and the dominance continues to go up, it would imply that it's still more similar to 2019 than it is to 2021, even though we're more similar in price to 2021 than we are to 2019. The purpose of these rallies by Bitcoin is to break the altcoin market down. It's to shake the altcoins off of their collective Bitcoin support levels so that when Bitcoin finally gets a larger drop that's more than 20 to 22%, the altcoin market simply has nowhere to hide. I know a lot of people don't believe that that could possibly happen, but 2019 was brutal for alt Bitcoin pairs, and alt Bitcoin pairs have been getting destroyed over the last several months, unless you include the last few of the altcoins that have outperformed. I know there's several micro caps and smaller market cap altcoins that have outperformed, but there's no denying that the dominance of Bitcoin has continued to go higher in the face of expectations by most people saying that it never would. And yet here it is pushing back up theoretically to that 54% level. So I think it's something that we have to keep in mind. We've talked a lot about fib retracement, right? And how, if it wants to follow suit with what it did previously, or what we saw ETH Bitcoin do, it would mean going to at least that 0.786 level, right? So it's now made it to that 786 level. So there's also reason to believe that there could be some resistance here, right? You've noticed here there's been a little bit of resistance out around that 58K level. It happens to correspond to the 786 fib retracement, right? So there is a little bit of resistance here, just like there was some resistance here at the 618. But again, if you go look at what ETH Bitcoin did, you'll see that it also got to the 71 or the 786, and it actually rallied up to above that peak, but below the secondary high, right? So it did eventually make it above the 786, even though in the short term, it did get a fairly strong rejection. So you can see that ETH Bitcoin rallied up to the 786 and then got a rejection back down to the 618 before ultimately going all the way up here. So looking back at Bitcoin, if it were to follow suit and if it's not able to get further extended from the 20-week moving average, or maybe it's only a wick, maybe it gets into 58K and then it gets a larger drop just like ETH Bitcoin did, just note that the 618 is around that 48, 49K range, right? So that's an important level, right? If we do get a pullback, let's say sometime in early March to the 0.618, see if that holds, right? If it holds, then you could get a bounce back up into this phase over here where the Bitcoin dominance goes parabolic, just like it did over here in 2019, right? After it had this move, it had a pullback and then got another move back up. And then that's where a lot of these altcoins just simply got destroyed on their Bitcoin pairs because they can no longer compete with Bitcoin. And that's the danger for the altcoin market, is that as Bitcoin goes higher, it's harder and harder for these, for the people bidding up the altcoin market to keep pace with Bitcoin. Remember, Bitcoin doesn't really need, all the social interest in order for the Bitcoin dominance to go up. The Bitcoin is the blue chip. So a lot of people just sort of go back to Bitcoin if they want to go to the relative safety in the asset class. But the altcoins, everyone sort of spread around them. And the problem for the altcoin market is that while I know everyone would very much like to sell their altcoins at much higher prices in a few months, and I'm not saying it's completely out of the question. The problem is that retail hasn't returned yet. If you look at like YouTube views, it's fairly clear that retail is nowhere to be found in the sense of where we were in 2021, which is kind of similar to like 2019, where retail interest was fairly subdued, which also corresponded to tighter monetary policy. So when you think about, everyone keeps talking about, well, retail's not here. How many times on X, formerly Twitter, have you heard someone say, well, just wait until retail arrives, right? Just wait until all these people come back. They didn't come back in 2019 because we had, it was tighter monetary policy, right? And Bitcoin had a really impressive rally back then too. In fact, it was a stronger rally than what we've seen so far. It doesn't mean that this one can't turn into something similar, but back then it was about a 360% move, right? We're currently up around 270% or so. So you can't say, well, that was different. Bitcoin went up more back then than it has now. The reason why people are making it more so appear to be 2021 now is just simply because we've returned to the highs, where in 2019 we didn't. And we're still not there yet. And remember, ETH Bitcoin basically ended up making it above the first peak, but not the second peak. So we do have to be careful about that. We've talked a lot about how Bitcoin could take back over going into the halving. I know a lot of people threw on the towel on Bitcoin dominance simply because, because it was, it had seen a pretty big pullback. But I do think that we must consider that the halving is likely going to draw that liquidity back to Bitcoin. So what I'm saying here is that, at some point, I'm guessing in the next couple of weeks, I don't know exactly when, right? I really don't know exactly when, but you likely will get a pullback. And the question is, does it hold at the 618 or somewhere around there? And if we do get another push up, just like 2019 and just like 2021, does the Bitcoin dominance go up or does it go down? If it goes down, right? If the Bitcoin dominance goes down into some type of phase into the 60K range or even, the high 50s and early 60s, if it goes down and stays down, then I would have to pivot my view. But if it continues doing what it's been doing for the last couple of years, then I think this is more likely to happen where the dominance goes up as alt Bitcoin pairs break down. And alt Bitcoin pairs are they're hanging by a thread right here, just like they were over here back in June of 2019, right? I know a lot of people say, well, when are you going to do another Bitcoin dominance video? I did one yesterday, of course, but a lot of people say, guys, every video is a Bitcoin dominance video, right? It all comes back to the same idea, right? Just because I put a different name on the title doesn't mean it's not a Bitcoin dominance video. The Bitcoin dominance is very useful in terms of identifying, the behavior of the cryptoverse. And it's no coincidence that as Bitcoin is reaching into the upper range up here, no coincidence that the Bitcoin dominance on the monthly is making a very similar move that it did back over here, where it had two red candles and then it just exploded up into a new high and it took out this prior high of 52% and then it went all the way up to 54%, right? This high here is around 55%, so perhaps it'll go up to 56 to 57% once we just simply break that high. Very similar pattern. I think 56% is that level by Bitcoin dominance that I've said could mark the end of the rally for at least some time. I'm not saying permanently, but once the dominance reaches the 0.5 fib retracement, that's where it ultimately found a local high back in 2019. And it seems like a lot of this is coinciding around the halving. So you could have this return by Bitcoin dominance to that 0.5 fib retracement at approximately 56% Bitcoin dominance. That's what marked the local high by Bitcoin in 2019. It was when the dominance returned to the 0.5 fib. Do note that after that happened, after that happened, right after it returned to the 0.5 fib right here in June of 2019, that's ultimately what marked the local high for Bitcoin USD, but Bitcoin dominance continued to go higher into that distribution phase. Okay, so I do think that there's reason to believe that something similar could be playing out, especially with a lot of these altcoins sitting on fairly precarious Bitcoin support levels. So retail, as much as everyone would like to say that they're here and they're going to buy your altcoin bags, it's still fairly subdued, right? It is still fairly subdued. I'm not saying it's impossible to come back. They did come back last cycle, but no, last cycle, they didn't actually come back until the post-halving year, right? So you're talking about another year from now before they came back in the last cycle. And in the 2019 rally, despite it being a more impressive rally than we just saw, it was still relatively low interest, all things considered. Why? Because of where I think we were in the business cycle. So going back to Bitcoin USD, we're currently just above 52K, right at the for the fib retracement at the 786, almost to the dot here. If we do extend above it and then get a sharper pullback sometime in March, look for the 618. To get a 20% correction down to the 618, it would mean Bitcoin going up a little bit higher, but not much, right? It would mean going up a little bit higher, maybe getting that correction. If that holds and we get another push up, that's where I think altcoins could really struggle against Bitcoin. Because I know everyone keeps saying, well, just you wait, my altcoin's going to catch up. Yes, they caught up over here, which is what everyone thinks is the most likely outcome, because most people that joined crypto joined in 2021, right? You don't believe me? Look at the social interest. No one cared about crypto over here. Everyone most everyone, 95% of the people watching this probably joined crypto over here, right? So when you look at a Bitcoin chart, you think, oh, well, Bitcoin's up here, my altcoins are going to go crazy against Bitcoin. What if you're not there in terms of alt Bitcoin pair behavior, but you're here in terms of alt Bitcoin pair behavior, which was not good. So something to think about, something to remember as we continue this move by Bitcoin USD. Some other things that might be interesting to look at. Trying to remember, there were some other things I want to take a look at. One of the things is net liquidity. So if you look at net liquidity for Bitcoin, one of the things you may note is that in that 2019 rally that eventually finally lost steam just before rate cuts arrived, you can see pretty clearly on this chart, right? If you look at this first peak, right? You had this first peak, and then you had two smaller peaks. Bitcoin USD ultimately found that local high at that second peak on net liquidity, right? So you had the third peak, right? First peak, second peak, third peak. It found that local high on that third peak of net liquidity. And if you go look at the same thing over here, right? You had your first peak, this was your second one, and then your third one is potentially taking place right now, which could also correspond with Bitcoin USD finding that local high. And again, I mean, it's already come back down a bit. I don't know if it's going to push back up. It certainly could push back up if the dollar gets a pullback. We have talked about the dollar kind of emulating Bitcoin dominance accumulation phase back. And if it does that, it means the dollar could pull back slightly before putting in a higher low and then trending higher. And do note that in net liquidity, it did get a push back up here in March of 2023, right? The net liquidity bled down here into late February, early March. Early March arrived, we saw net liquidity go back up and then ultimately fade back down. And you can see that it is starting to turn a corner here, right? I mean, it seems like net liquidity has started to move back up a little bit. And when net liquidity made that move, that corresponded to Bitcoin USD and Bitcoin dominance going up as well. And so if that were to happen, that could very well correspond to a very similar move we saw in 2019, right? Where we found that local high around that secondary peak. Note that this secondary peak right here, if it were to emulate what happened last year, could extend all the way out through April, right? Which coincidentally is the Bitcoin halving. And we've talked a lot about how this market is very narrative driven. We saw ETH Bitcoin rally in its spot ETF, we saw ETH Bitcoin rally into the merge. We saw Bitcoin USD rally in its spot ETF. We said, look, Bitcoin dominance is likely going to go up into the Bitcoin halving just because liquidity will flow away from the altcoins and they'll flow back to Bitcoin. You know, Bitcoin is near the prior all-time highs. How many altcoins are, right? And if Bitcoin does get a larger correction, right, if Bitcoin goes into some type of topping pattern or distribution pattern over the next few months and gets a larger pullback in, say, the summer, what do you think happens to alts then? You know, I mean, back over here in 2021, we finally got that correction in May, right? It was after, you know, all that hype that occurred January, February, March, and April. But during this entire distribution phase, alt Bitcoin pairs were going up. During this one, alt Bitcoin pairs were going down. And remember, what marked this top was alt Bitcoin pairs breaking down. What marked this top was Bitcoin dominance cratering to like 40% or something, right? I mean, it absolutely cratered into May. And normally when the Bitcoin dominance gets down to like really low levels, like 38, 39, 40%, it signifies a major top is in. And that was one of the reasons why back in early 2021, I was very clear that I thought we were going to have a summer lull, right? I thought Bitcoin would drop. We were pretty far extended. And it's funny because we're actually kind of getting the same way, right? Like if you remember, if you look at like the year-to-date, or not the year-to-date ROI, if you were to go look at Bitcoin ROI from the peak and measured out to the next peak, you remember how at one point last cycle we got very far extended from the prior cycle? It kind of seems like we're doing the same thing right here. Like we're getting pretty far extended. We finally got a pullback in May after being far extended. I wonder if something similar is going to happen, right? Where we're just getting further extended beyond the prior cycles. And then we get some type of, you know, some form of mean reversion back down to where we normally are at this point in the cycle once the summer finally arrives, right? And once the, you know, some of the hype has worn off for a little bit. And so I do think that is relevant. And I get that a lot of people are very critical of the idea of altcoins struggling against Bitcoin, and they want their altcoins to do well against Bitcoin. And I hear you guys. Like, that was me in prior cycles. Like, I definitely know what you're talking about. In 2019, it was very frustrating to watch my altcoins bleed against Bitcoin. But I learned my lesson back then that during QT and high rates, it's better to stick with Bitcoin and watch it go into a distribution phase. Remember, if Bitcoin dominance does reach that same extension, fib retracement of the 618, that would mean Bitcoin dominance going all the way to 60%. So if we do reach 60%, that might mean that the market breadth is way too narrow, and that's where you normally get those larger flush outs, and that could eventually lead to breadth coming back after all that happens, right after the Bitcoin dominance tops out, theoretically at approximately 60%, give or take a couple percent, right? What's a couple percent among friends? So that's the general idea. Bitcoin USD is extended above prior cycle highs and are above the ROI as measured from the market cycle peak compared to the last two cycles. Back in 2021, people told me this time was different. It was going to go to 300K because of all the institutions. What's funny is they're saying the same thing again this time. So the same narrative that last time occurred, that they would never let Bitcoin drop back down because everyone's getting in, they're saying the same thing here. So yeah, I mean, I get it. Like, I'm not saying that Bitcoin can't extend. I mean, my thesis for a while now has been that risk on until 56% dominance, right? Risk on until ETH Bitcoin breaks down. Risk on until alt Bitcoin pairs break down. And theoretically risk on until gold's putting in daily closes above 2070, which is the prior range highs. Remember, gold, when it finally took out these range highs over here, guess when it occurred? It occurred basically the same week that Bitcoin USD found a local top. So we can see all these things corresponding to each other, right? Gold is building up to the breakout point. ETH Bitcoin is falling down to the breakdown point, which is exactly what happened last cycle, right? Which is what marked a local high for Bitcoin. Once it fell, right? Once it fell, at the same time that all Bitcoin pairs are breaking back to their lows, it's all coming together, right? It's all happening at the same time. And also at the same time that Bitcoin dominance plus ETH dominance is reaching the same exact level that ended up marking the local high in June of 2019. And also, we talked about the USDT dominance getting rejected here at the bull market support band. We had a whole video on it, right? Just go look at USDT dominance on my channel. We did a whole video saying, look, this could easily get rejected here at 6.5%, make its way back down to 4%. The reason why this trend line is important is because it has marked local highs on Bitcoin, right? November 2021, March, April 2021, June 2019, January 2018, February 2020, even the pandemic, right? So you can kind of see that it's fading back into that level at around 4%. And also, if you look at total market cap and you extend this peak here to these peaks over here, you extend this low to that weekly close low right there, right? We're coming into that midpoint center line, which is the same spot right there. So there's definitely a lot of confluence. I think, I think if Bitcoin does enter into the 60K range, it's going to be a very dangerous range for altcoins on their Bitcoin pairs. I'm not saying altcoins can't go up on their USD pairs. What I'm saying is the only reason altcoins are going up on their USD pairs is because Bitcoin's going higher. And if Bitcoin were to get a larger correction, let's say, going into the summer or even before, then the altcoins would likely show a lot of weakness, and then they have nowhere to hide on their Bitcoin pairs because during the Bitcoin rally, Bitcoin broke the altcoins off of their Bitcoin support levels, so now they simply have nowhere to hide. What could possibly cause all this, right? I mean, it seems like Bitcoin has everything going for it right now, right? Not everyone, a lot of people are trading in their altcoins for Bitcoin. I think it's pretty late at this point. I mean, I don't know what you were doing for the last 2 years, but a lot of people are doing that. You got the spot ETF. You have everyone talking about it. What could possibly go wrong, right? Well, it's the labor market. The labor market could potentially show some weakness. I'm not saying that it has to all materialize immediately. In fact, it could take many more months before anything materializes. But there is some weakness there. If you see the unemployment rate go above 4% sometime in the next few months, you could get a larger pullback by Bitcoin. I'm not saying Armageddon, right? But I'm saying, guys, we do occasionally get pullbacks in the market. I know it seems hard to believe because we haven't had one in a while, larger than 20%, but it does sometimes happen. And if the labor market were to show weakness, then I do think that could ultimately bleed over into the cryptoverse. And I do think that would have some negative consequences, right? I mean, all these inverted yield curves historically have led to some type of weakness in risk assets for at least some time. And I don't really understand why this time would necessarily be any different. I mean, you could get a situation where the unemployment rate prints in the 4% range, you get some type of big scare by Bitcoin, and then the unemployment rate comes back down for a while before then going back up, right? Like something like that could happen. And I think we should be prepared for something like that too. But I do think the labor market could bleed over into the cryptoverse, and it's been a very slow process. So I think that's the main risk. I don't really think the risk comes from within the cryptoverse as much. I think the crypto risk is mainly got handled over here in 2022. It was sort of the macro risk that took Bitcoin down in 2019 and after the Fed pivoted. Fed hasn't pivoted yet. I honestly am baffled at how people can say we've had a soft landing or a no landing or we've, figured out what type of landing we're going to get before the Fed cuts rates, right? I mean, until the Fed cuts rates, the jury is still out, right? Hard landings have historically only really occurred after the Fed started cutting rates. So I'm not saying we have to have a hard landing. It's possible we have a soft landing. 1967 was a soft landing. Even the mid-1990s, we had a soft landing. I'm not saying it's impossible for us to have a soft landing. What I'm saying is that how can we know before the Fed cuts rates? The longer the Fed stays higher for longer, the more likely they are going to cause some damage to the economy, right? And you can see like bankruptcies are going up. Right, if you were to look at like bankruptcies in the United States, and we can see that they're going up. They're still at relatively low levels, all things considered, but it's more the rate of change that matters. I mean, this level over here when it was going up in the financial crisis was still low compared to where it was back over here, but it was the rate of change, right? And bankruptcies are going up, right? So I don't really think we could all unilaterally say, all right, we've had a soft landing when the Fed hasn't even started cutting rates yet. We won't know until the Fed actually starts to cut rates whether they achieved a soft landing. History shows that when inflation is high, it's really difficult to thread the needle, right? It's really difficult to thread that needle and to achieve a soft landing. I'm not saying it's impossible, but in the 1940s, they held rates too high for too long, and we had a hard landing. We had a deflationary crash. In the 1970s, they pivoted too soon. And what happened? We had the reacceleration of inflation, and we had a crash because then the market had to price in a lot of other rate cut or a lot more rate hikes. So is this the time that the Fed threads the needle and are able to achieve a soft landing? Maybe, but we simply cannot know until they start to cut rates. We simply cannot know, and so I think it would be premature. So, if you think like what could possibly derail anything from happening here in the cryptoverse, right? What could possibly derail it as the months go by? That's what could derail it, right? It would be the labor market showing weakness. And again, I'm not saying an Armageddon type thing, but it could lead to a larger drop in the cryptoverse. I mean, we've had these, we get these 50% drops sometimes, and sometimes they end up being a lot more than 50%, right? Here's a 50% drop, there's a 77% drop, there was a 50% drop right there, and then there was a 60% drop, right? Right here we had a 50% drop. There to there was a 70% drop. Like, it happens sometimes. It's not the end of crypto if it happens. It's not like Bitcoin can't survive a recession or even a recessionary scare. I mean, I think it can. It probably only make Bitcoin stronger. But the point is that if that stuff materializes, then that could happen. And the last thing I'll say, theoretically anyways, unless I think of something else, is the fear and greed index is now at 82. Okay? I've been talking about this for a while, and I've said, look, guys, it seems like it's building up here. In 2019, the signal was when it went into the 90s, that was all we got. That was all we got. So not only do you have ETH Bitcoin bleeding back down, not only do you have alt Bitcoin pairs sitting on fairly precarious support level, not only do you have gold pushing up to 2070, and you have Bitcoin USD going back to near the highs, and the Bitcoin dominance moving up, and the blue chip dominance, which is Bitcoin and Ethereum dominance, moving back near 73%, which marked the local top in 2019. And we're moving to potentially lower interest rates here in the next few months. It seems like it's all coming together all the puzzle pieces are coming together, right? And here we are. One more thing, the fear and greed index has now moved into the extreme greed. And what if all of it happens at the same time? What if in March or April or May, sometime in the next few months, we see ETH Bitcoin weekly closes below 0.049. We see Alt Bitcoin pairs go below 40%. They're currently at 42. We see gold above 2070. We see the fear and greed index at 90 to 95 or 100. And we see the Fed start to cut. Could it not be the same thing? It's just a risk to consider. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. We'll see you guys next time. Bye.